Cathie Wood was interviewed on CNBC, and she was red hot on her continued bullishness on Tesla, especially at this time. While Tesla has been flat and the Mag 6 skyrocketing, Cathie is projecting that not only will the electric vehicle business jump higher, but will be the bulk of the market in the next 5 years. But she is still forecasting Robotaxi to happen within 2 years. Her price target remains at $2,000 per share by 2027. That's a 10x in their base case, not even the bull case. So today we have Larry Goldberg joining us. He's a two-time multi-entrepreneur, and he's just brilliant in so many ways. I'd love to get your feedback on all this, Cathie Wood and ARK, and their perspective. Thanks, Larry.
Yeah, I've been following ARK for some time now. And, I actually invest in some of their funds. And I have a huge respect for the intellectual integrity with which they approach their investigations. And so I have and by the way, I listened to them in 2017 and 2018 when they were predicting the stock price of $4,000, which at that time, was tantamount to where the stock is today, or where the stock was in the last year or so. So not only do I put a lot of credence in what they say, but also I find that they're very intellectually stimulating. So sometimes I disagree with some of the contentions, but always find the underlying research to be extremely valuable. So actually, that's really the highest add value that they bring, is the research that they do, in addition to, of course, their stock picks, which are quite interesting, actually, and some I disagree with.
Yep. So let's watch this 5-minute interview that she did with CNBC. The first half, about 2.5 minutes or so, she's talking about her investments. And like you say, I mean, they're disruptive technologies. They've not done well in the last 5 years, but this year, finally, it's starting to pop up again. We'll see what they say about that. Let's watch this video.
So let's talk about this magnificent run, big tech, innovation, volatility, and maybe if things are getting just a touch bubblicious. With us now live from ARK's Big Idea Summit 2024 in St. Petersburg, Florida, is ARK Invest CEO and CIO, Cathie Wood. Cathie, first time on Last Call. It's great to literally bump into you in Arizona last week. Thanks for joining us. Some of your top holdings, thank you, have soared in the last 90 days. Shopify, Coinbase, UiPath, Block, all up more than 30%. Are you worried at all that certain parts of the market are starting to get, or maybe already are, a little bit stretched?
Well, if we're taking a look at the market, if you look at what happened last year, 7% of the index. Wait, let me think about this. I got to think about this, Brian. Most of the returns in the S&P 500 were the Magnificent Seven, or now people are calling them Magnificent Six. Some of those valuations are stretched. But if you think about that, most of the market did not rally last year. I think they were, most of the rest of the market was up only 7%. That's where the 7% number came from. And so we think, and we know from our own stocks, which mostly are not the Magnificent Six, that they have corrected tremendously. They're now starting to show earnings momentum and surprises on the upside, not just from revenue, but also earnings. And we think they have a long way to catch up. We are way below where we were at our peak. Now, maybe we shouldn't have been there, ARKK at 160. But down to 45, we think interest rates clobbered our style.
Yeah.
And we've paid our dues, and now earnings and revenue growth will speak loudly.
Yeah, all the people there in the background, I think they must understand that, and anybody should understand, that you're buying into stocks that can be very volatile. The knives have been out, as you've probably seen, people coming up, Morningstar, et cetera. They've come after you. But I would imagine your message to investors is we are investing in some companies that are going to boom wildly and become 10Xers. And there's other companies that may go away because these are the high-tech AI investments. I would imagine that is got to be a clear message to people watching and the people sitting behind you right there, Cathie.
Absolutely, absolutely. We're saying that if you get on the right side of change, these companies will deliver super exponential growth. What does that mean? It means not only rapid growth sustained, but an acceleration in growth. For example, Tesla.
Okay. So before she gets to Tesla, we're about to do a show right after this on disruptive technologies. Tell me what you heard there and her investment style and what she thinks. Yeah.
So I have to align myself with her because, we're going to talk about the innovator's dilemma, or what I call the valuer's dilemma. And the valuer's dilemma means that when in an innovative company, you have to throw away your spreadsheets. You can't, calculate at a 7% growth rate and a 2% this and a 30% cost rate. When innovation happens, it is explosive. And so, when Cathie said Tesla to 4,000, everybody hooted and hollered, but it got there. And it got there so rapidly and in such a, explosive manner. People who were behind their spreadsheets could not catch up. And so, if you look at some of the technologies that they're invested in, robotics, for example, robotics have been very sleepy for a long time. But as it explodes, it's going to be awfully difficult to catch up. I mean, it just, overnight, people will start to understand what's happening, and the spreadsheets still will not catch up. So I'm aligned with her 100%, and this is why I have such, I'm a fan. I'm a fan.
Yeah, okay. Yeah, disruptive technologies. And so for people who invest in Tesla, you are investing in a disruptive technology. Let's listen to what her perspective is on this.
It's going through a lull right now related to the cycle. But when autonomous taxi networks, platforms kick in, as we think they will within the next 2 years, I will say, then what we're talking about with Tesla is a reacceleration in growth and a huge increase in margins, because robotaxi platforms are SaaS models, software as a service models. We have a lot of stories like that in our portfolio, and they are highly misunderstood.
Yeah, truly. And a company that feels like some are starting to understand it less lately, Cathie, is, of course, Tesla. It's not performing, and it feels like everybody everywhere is going after Elon Musk all the time. It is your second biggest holding. Are you holding on, and how should investors view Tesla right now?
Yes, well, we report our trades every day, and you will see that we have been buying Tesla. There is so much negative psychology in the stock right now around electric vehicles themselves, which we think is misplaced. We think electric vehicles are going to continue to gain share and really take over the market in the next 5 years. EVs, we think, will be the bulk of the market in the next 5 years. So, and then beyond that, robotaxis are going to change the landscape entirely. So our target price, published target price, which is going to change, is roughly $2,000. The stock is a little below $200. So we're talking about a 10x in our base case, and that's not even our bull case.
Okay. All right. So a few things there. EV is going to be the bulk of the market. Tesla's doldrums right now, they've been buying. And then she says that the EV market is going to be the bulk of the market within 5 years. Robotaxi, she thinks, is going to happen in 2 years. And so that's going to completely transform everything. So she's been fairly consistent about this, and they've been sticking to their guns.
I'm very aligned with her on timescales in general. I have the FSD, becoming mature within 2 years. I think Robotaxi, the mechanics of implementing Robotaxi is going to take a little bit longer than that. So, 1 year this way or that way is not going to make a very big difference. I know everybody is very concerned about the share price today, but for me, 1 year this side or the other isn't really material. When we're talking about growth in the 10x range. So yeah, I'm aligned 100%. And what she hasn't mentioned are all the other lines of business in Tesla, which are going gangbusters at the moment. She didn't touch on Optimus, which is, by the way, one of their innovation platforms is robotics. She didn't mention energy, and that clearly is, underway in a big way at Tesla, and perhaps its growth is far more than is being evidenced on their numbers yet, because so much of the pipeline is filled with projects where they may have completed the project, but they're waiting for the switch on. So I'm absolutely aligned with her. If anything, I'm more bullish.
I love it. Okay, that's good. Let's break down some of our points though, right? So first, she talks about EVs. That is going to be the bulk of the market within 5 years, which, let's see, 5 years from now, 2024, 29, I think it's going to be around 50%, maybe even more, 60%. And then I think in our conversations, correct me if I'm wrong, but to remind the viewers, you've said it's going to be very slow for the next 2 years, but then there's going to be a cliff because ICE vehicles will just stop. People will just start buying EVs at mass. What's your target for 2030? Percentage?
We're on the cliff already. We're on the cliff already in China.
Yes.
Europe is ahead of the United States. Within 2 years, we'll be on the cliff in Europe. Here, it's going to take a little bit longer, but boy, it's coming. So, I'm very bullish about, hitting that number in the 28, 29 timeframe. People talk about 2030. I think it's coming before then. And robotaxis, once Tesla starts churning out the next gen vehicle in robotaxi mode, because, next gen is a platform. I've said this many times and I'll try and say it again. Robotaxi is not a car. It's not a vehicle that they're going to be releasing. It's not like a Model Y or a Model 3. It is a platform. And on that platform, they're going to be releasing a robotaxi version of that product. That is going to be an enormous volume, Now, whether they sell it or whether they manage the network themselves is an open question. But when we get to that 28, 29 timeframe, the numbers are going to be ridiculous. I mean, just ridiculous. So, is it 27? Is it 28? Is it 29? And the numbers 5 million? Is it 10 million? Is it 20 million? It's almost academic because, Cathie's right. This is going to be a 10x. And how many X beyond that, I don't know, but it's going to be a 10X.
Yeah, I love that you just said that, because it does make sense that if Robotaxi works and they're creating a Robotaxi first design of a new vehicle, they wouldn't just make a compact car or an SUV kind of thing. They'll want to convert everything that they're doing into a Robotaxi, like a van, truck, everything. So this unboxed model will let them set up to be able to do as Lego, create that. The other thing you said was Tesla, ARC has not yet, built in bots, but they are working on it. They're currently contacting folks and they're kind of creating their research on this, and they've not done that yet. What's your thinking about that?
Yeah, they haven't added Optimus to their valuation of Tesla yet. You can look at their valuation. They have an open source model for it. It's available for download. I've downloaded it, and they've been criticized for using the Monte Carlo method, which is a statistical model, and people don't understand the Monte Carlo method, so they criticize it because they can pick one line item that is clearly ridiculous on the upside or the downside, and so they just don't get it. But their models are amazingly adjustable, variable, and you can put any assumption into it. You can put multiple different assumptions into it and get multiple different results on a very reliable statistical method. So adding Optimus to that, I think, will be very powerful, and I think it will have a very material impact on their valuation. Look, valuing innovative companies is very difficult. I have a whole blog about that, and hopefully we'll talk about that in due course. But and I posted that to X. Valuing innovation is extremely difficult because there is no history to rely upon. And ARC's done an amazing job of developing theory around that. And some of the theory, is really being proven very, very reliable. So there's so much value to following ARC and listening to them. So yeah, I think that adding Optimus to the valuation is going to have a real impact on their outlook for Tesla.
Okay. And then when we listened to her price target, she did say that $2,000 is what they've published on their website. They've been saying this for a while, 2,000 by 2027, which is a 10x. She said it's a base case, not even the bull case. But then if you listen to her words, she said, and this will change. So I don't know if that meant it's going to go down.
No,
or it's going to go up.
It's going to go up because of Optimus. Yeah. I don't think they fully valued energy. I'm going to have a chat with them about their evaluation of energy, because I think they're missing a really, really big number. And there's a lot of really good information on X about energy valuation. And, I've done a sort of a very quick look at this issue of, all these reserves that they have in the energy pipeline in terms of unbilled revenue. And there's no information as to whatever cost may exist against that unbilled revenue. So it's really difficult at the moment to project energy. But the best case is unbelievable. I mean, it's extraordinary. It's margins beyond 40%. The conservative case is, well, there's probably some costs involved in these reserves that they've built up against it. So let's be a little bit more careful about it. But it's no doubt in my mind that they're making up to 30%, and the actual potential for energy is extraordinarily high. I mean, it actually competes against, in terms of dollars, the potential vehicle market. So I don't think we've properly valued, and I don't think anybody's properly valued energy yet.
Yeah, they've not yet put in the energy. They've not put in bots yet. Very bullish on Robotaxi, and we're going to see what they do when they change that. So the other comment I want to bring up was ARK Invest just released this post from Sam Corris, where they were talking about why they think that the electric vehicle market, why Tesla has been a little flat for now, but it might actually pop. And it's all got to do with interest rates and the monthly payment and the price of the cars. And so, here's Sam Corris from ARK Invest saying that monthly cost matters to consumers. And he showed this table here, this chart. And it showed that in 2019, the Model Y long range, the estimated monthly payment you would have to pay is $800 per month. And that's exactly where we still are at 2023. And the reason is because interest rates popped. And then so they had to reduce price of the car, but the monthly rate's still the same. And that's why it's not changed. But then he's saying now, this is just a recent tweet, the vehicle price decreases have offset the change in interest rates and kept the consumer in the same spot. But when vehicle price decreases to the end consumer, that is when the market should open up dramatically. So basically, if there's other future price decreases, that's when this is going to just completely just change the game, right? Because electric vehicles will actually be now no longer at par, but will be cheaper than ICE. And then that's where you're talking about the ICE will just fall. Electric vehicles will skyrocket. And so, margins have stabilized. And then if they are able to reduce the cost of goods, which they should be able to, because everything's going up, like battery costs are continuing to fall. Right. Their automations continue to improve. And so this will then, price goes down just a little bit more. All of a sudden, boom, the world changes.
Yeah, so there are some offsetting factors. I mean, one factor is that the Model Y is an expensive car. It is in the upper bracket, and so the TAM for that is relatively small. It's broken all records for its position in the model hierarchy. I mean, it's competing against models in a much lower price category. So I think the elasticity that Sam is talking about is not as great as it could be for a smaller car. And we have to look at what the Chinese are doing, and the Chinese are coming out with some really good low cost models, smaller models that are perhaps more appropriate to the European purchasing model. And the danger of China exporting in large numbers to Europe is ever present. The danger of China setting up factories in Mexico, South America, and South Africa is ever present. So I think that's why the next gen is so important. So yes, Sam is right. We're going to see improvement in volumes as interest rates decline. But we have to speed up as fast as we can to get that next gen out. And I believe that's the focus right now at Tesla.
Yep. Great points. Appreciate that. So we just listened to Cathie Wood being interviewed by CNBC, and you are in alignment with some of the things she's saying, despite, Tesla being hammered down low and the doubts that are now coming in. This is where you need to just stick with the facts, right? What's going to happen to EVs? What's going to happen to Robotaxi? What's going to happen to, like you just said, margins, and when the next gen comes out?
Herbert, it's like a coiled spring. It takes time to build that tension up, and we're in this process of building the tension up.
Look at this,
that
perfect.
Spring explodes.
Yeah.
And there's no telling what date it will happen. Anybody who tries to time this is crazy.
Yeah, I just happen to have this chart. The Tesla stock, flat, jumps, flat, jumps, flat, and then maybe at some point it'll jump or whatever. We'll see what happens here.
Yes.
That's
a very
thank
good
you
job.
so much. Thank you so much, Larry. Appreciate you. Follow him on X at Tesla Larry. He often has these long threads, and he does these deep dives on lots of things. He's done superchargers. He's done energy. He's now just on Innovator's Dilemma. He's been doing these things. So thank you very much, Larry. Appreciate you. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.